you love your system because over the long run, your system works, right? If you follow the rules, you don't change it all the time. You don't overfit it. You don't modify it only because it, has had, say, a negative quarter or even a negative year. You stick to it. It's the stick-to-itiveness, right?
On today's show, we have MORITZ SEIBERT, co-founder and one of the Twoquants. He believes that quant trading is a successful approach instead of long buy and hope. MORITZ, thank you for joining us today. And why don't you kind of give us some insights into, what is Twoquants?
Hey, Joe. Thanks for having me on your show. Thanks for the invitation. Cool to be here. So yeah, Twoquants is a project that I started together with a friend of mine, business partner of mine, Moritz Hayden, same first name as I. And we started that project about 3-ish or so years ago. But it was supposed to start as a website, a financial blog, writing and talking things about quant trading, trend following, systematic trading, options, these type of things, which is an area that I have a professional background in. And then we tried to scale that into essentially a newsletter business with a subscription model. And we found that very hard. I mean, it's a difficult thing, or you need to be very methodically looking to, increase your email subscriber list. I mean, we have a few thousand, but, by the law of large numbers, if say you have, 100,000 subscribers to an email list and 100,000 people clicking through your newsletter, then, maybe 1, 2, 3% of them would subscribe and pay a fee that you could then generate a revenue stream with to call it a business. But if you're not there, it's very difficult to get something like that to scale. So we removed the subscription model. Everything on that website, twoquants.com, is for free. We hope people like it. But what has taken off is an NFT project, which kind of was a side gig and a fun thing that we just decided to do about 2 years ago during the Christmas period. We have a Real Vision bot, which is an artificial intelligence that, dissects Real Vision interviews and detects emotions using speech recognition algorithms. And we created NFTs with Raoul Paul, who is the co-founder and CEO of Real Vision, and the bot, and some other people. And then we have the Alpha Mid-Buffer project, Ape with Guns, which became a project and a community in its own right with the Discord server channel. So that's become reasonably successful. It's not like in ULF Sport Ape categories, for sure not. But it is a reasonably successful NFT project.
Now, does Real Vision bot also poll the public in regards to the crypto portfolio that it's predicting most people own or would like to have?
Yeah, so there's a survey and a voting process that goes on right now. The bot has a macro portfolio, which also includes traditional markets, and it has a pure crypto portfolio. So it's grout driven. It's the hive mind that we're using. So on a weekly basis, that portfolio may change, and it does change. And some tokens or some digital assets may pop out or drop out, and then some may come in. Recently, we've had some really good performance because of Luna, which has been added back in. Solana, I think, as well, has been doing relatively well. I mean, it's been going down for month to month, but in recent weeks, it's actually recovered quite a bit. So yeah, we've tracked this portfolio against a bunch of benchmarks, and what you can see is that we're actually outperforming the market. So there seems to be something there. I mean, it's still too early. I don't want to, sound like, this is a done deal. We're definitely able to produce alpha and the hive mind is able to outperform the market forever. That would be far too premature to say from a quant point of view, because we don't have enough data points. It's still very noisy. But what we're seeing from inception to date is that we have that outperformance, and that apparently the selections that the community makes and that the bot makes, there's some alpha there, and it outperforms, an equally weighted benchmark of tokens.
I'm sure there's some people that are trading their own portfolio and using this bot as guidance into regards to how they should allocate in their portfolio.
Maybe they do. And actually that is one of the things that we're looking to put on chain together with Pollen. Pollen actually just started, I'm not sure if you've heard about them, Joe, but Pollen is an on-chain investment management provider, if you will, on-chain investment management platform. Enzyme, by the way, is another one.
Yep.
Maybe you've heard of Enzyme. Pollen is a bit younger. They just went live. And so essentially what you can, think of here is you have a vault that lives on chain. In that vault, there's, a bunch of tokens that you select. So you're the investment manager, you run that vault. You put Ether in there and Bitcoin and whatever you want, right? And then if that portfolio performs well, then other people on the Pollen platform can follow you. They can just, put some Ether into that vault and essentially track you like they would track an index. You essentially become their fund manager. It has a bunch of regulatory and licensing type of questions that come with that. There's definitely going to be some movement there, I'd say, on that front. But this is essentially how it works. And what we're looking to do is we're looking to put the bot portfolio, the Hive Manager and bot portfolio on chain with Pollen, so that the vault runs there. It's the bot's vault. And then if people want to follow the bot portfolio, they can very easily do that, but just, tracking that vault as opposed to looking at what are the positions that we have today and then implementing all of those positions themselves with the right weights.
So when it comes to the investing side, obviously you guys are, let's go back to the buy and hope strategy, right? So you're not so much a long-term investor. Can you kind of break down your thesis there?
Yeah, so I trade crypto in my trend following portfolio as well. So definitely there, it's not buy and hold, and it's not buy and hope. I would be, long a token if its trend is up, and I'm out of the token if the trend isn't up. I cannot short all of them. Ether and Bitcoin are easily shortable on the CME. If you want to, bring this into kind of like a CTA trend following context where you trade other futures contracts as well. So you go to your FCM, your futures commissions merchant, your clearing broker, you see you can trade the Bitcoin and Ethereum futures. Most of them in this day and age allow it. By the way, it hasn't been the case 3 years ago or 4 years ago. Not every broker was supporting Bitcoin and Ethereum. But now they do. You can put these two markets in. But say, Avalanche or, I don't know, Polkadot, they don't trade on the CME. So you would need to therefore combine a different venue, kind of like a different trading infrastructure into your trend following system, which runs automated trading futures, because you will need to think about, okay, how do I now trade Polkadot? And where do I trade it? Do I trade it with a US based trading venue, Coinbase, for instance, right? Or do I go offshore in like US offshore, Binance, FTX as examples? And who's my counterparty there really? How is collateral being managed? What are the risks? What can I post as collateral? Is it USD? Is it USDT? Or is it even Bitcoin or any other token that's acceptable as collateral? It trades 24/7, 365, doesn't really have a close. What market data are you using? What's the source of truth for, say, Polkadot? Is it Binance or is it FTX or is it a blend? These type of things. So it adds a bunch of interesting dimensions, new dimensions to your trading process that you didn't previously have. And then also the question is, what do you trade? Do you trade spot and funded? Do you trade leverage spot? Do you, trade perpetual? Do you trade a futures that may be listed on like a futures in air quotes, a forward contract, futures contract, fine, on FTX or Binance? Those are different things. And yeah, you just need to watch that carefully and be careful that you don't tap into a trap. By the way, shorting there it's doable now for sure, but say 2 years ago, it wasn't really that easy to, open short positions on all of those tokens, or it would have been very expensive to do that sometimes. So those factors all play a role. To answer your question, I'm definitely not buy and hope on nothing.
Yeah, well, and kind of explain that, because a lot of people obviously in the crypto space, well, I guess everyone has a different opinion, but there's definitely a track record around holding certain projects for a long duration that have outperformed everybody else. And so I'm kind of wondering how you take the opposite, maybe, and then look at the short term more than the long term. What are the factors that make you decide that?
Yeah, look, I'm really bullish on the digital asset space. I mean, that's for sure. I think there's something developing that's huge. Something, the network effects, now digital property through NFTs. I think there's a younger generation that is building a new digital world in front of our eyes, and they'll build something that works for them. So I'll definitely bet on them. I think something great is going to come out of blockchain technologies and probably many more things than we can envisage today. So yes, I mean, if you have that belief, then, you can just, you could, if you want to buy a bunch of tokens, like, I have a VC type of mindset here and hold them, hodl them. And, since 2013, I have, Bitcoin exposure and I have some Ether exposure, which just sits there and is on my ledger and I don't touch it. It's kind of like, so yeah, so that is, if you want, this is a buy and hold position because I don't touch it. But from a trading perspective, there is alpha potential in these markets. I mean, the crypto markets, to me, they are, even though that sounds like an oxymoron, they are the most inefficient markets in the world, and they're also the most efficient markets in the world. And let me explain why I say that. They are the most efficient because they're extremely open. everybody is invited to participate. You, my neighbor, pretty much anyone. I'm not sure if you need to be an adult. You don't. If you don't onboard in KYC with anyone, you can do this when you're like 12, 13 years of age. But it's a global, very open door arena, and everybody can enter. That is not true for futures. That is not even true for leveraged or derivatives type of trading. You need to have a margin account, a futures account. You need to be onboarded. Not everybody's allowed. You need to have minimum account sizes, right? You don't need to trade one Bitcoin. You can trade 0.111 of a Bitcoin. So it allows everybody in. It's 24/7, 365. There's no circuit breakers. There's no central clearinghouse. There's no limit up, no limit down. There's no volatility break or interruption and resumption of trading after, say, 5 minutes. There's no payment for order flow, right? There's different venues where the same type of product is traded at the same time. Binance and FTX, for example, right? Not just the CME for S&P minis. You have essentially siloed architecture that's global and arbitraged by professional traders and even retail traders. So that makes the market super efficient. So efficient that sometimes it hurts because, when you have these liquidation events or the market, is going down or going up. I mean, it does this in a brutal kind of way. When Elon Musk tweeted about buying Bitcoin, I mean, Bitcoin goes up thousands and thousands and thousands of points in a minute or two. It would be limit up on any other exchange in the US. There would be a volatility break on European exchanges before, you had the nickel saga here on the LME, which absolutely sucked, and they stopped trading and canceled trades, and all that stuff happens in crypto. And also on the other way down, if it goes down, it may go down 8,000 points in 3 minutes. And you kind of you look at the screen and you want it to stop, but it exhausts itself. And then, the market is kind of cleansed and it continues. So it's very efficient. It's also very inefficient and noisy because a lot of people without, I don't want to say skill, but a lot of people trade in it with a lot of leverage who think that, this is a nice way, a nice and a quick way to get wealthy and rich, because it is such an open door. You can go onto, any of these exchanges, and I mean, now it's no longer 100-to-1 leverage, but 20-to-1 leverage is easily achievable, or you do it in DeFi, and I'm not sure what type of leverage you can run there. But obviously, you have a lot of people coming in, trying things out. They hear something and they buy Dogecoin or they buy Polkadot. And I'm not saying this good or bad, but it's just they're not professional money managers, if you see what I mean. And maybe they don't have an education in risk management or position sizing. They only see the rosy upside of the trade, and it's definitely going to moon, but they don't know what they will do if it goes down, whether they will be exiting their position or doubling down. So that, because they all trade there, and you don't have yet, I mean, it's increasing, but yet you don't have massive institutional participation. It's growing, but because of that market structure, you have a lot of inefficiencies, and that provides exploitable patterns and structure in the market that you can trade as a systematic or quantitative trader and make money. Momentum, relative momentum, trend following, these type of things, they work in crypto. And they work in crypto in ways in which those strategies would have worked 35, 40 years ago in the traditional markets, but they no longer work that way in the traditional markets because the traditional markets are arbitraged by some of the most clever people on the planet, who fight for half a basis point on the S&P 500 volatility surface. You don't have these dynamics yet in crypto. I'm sure it'll come, but for the time being, you have these patterns and these inefficiencies. Mean reversion, right? Once the liquidation event is over, the markets mean revert. You can almost see it on the chart. So this is why this is a fantastic hunting ground for quant traders. And a lot of the crypto hedge funds these days are quant/systematic traders, who run market making algorithms, exchange arb, stat arb, pattern recognition, market making. This is all coded. This is all programmed. This all runs automatically. And if you've ever looked at their fact sheets and their performance numbers, I mean, Sharpe ratios, and we can debate the Sharpe ratio back and forth, but it's a measure of risk-adjusted return that everybody gets. but they report Sharpe ratios net of fees, and fees are 2 and 20, by the way, so it's not cheap. But even after fees, those Sharpe ratios are usually higher than 4, 5, 6, 7, 8. I mean, it's mind-blowing. And it goes to show that, oh, obviously there is something there, right? I mean, so a lot of these funds, they start up there, they do this, yield farming, one-sided, two-sided staking, hedge staking. All of that's super interesting. And then you have other funds who have a more thesis-driven, longer-term, long-only type of, philosophy, who are looking to pick the next Polkadot, who are looking to pick the next Solana for 2022 and make money that way. And this also works, which is amazing, right? So you have these people who, look at code, look at a project, look at the white paper, speak to the team, look at GitHub, see what's development and what development does. And they make those choices, good choices, and that produces outperformance to the market. So there's different ways to go about this, different ways to make money in digital assets. And personally, I've always been a quant trader. I don't think I'll change. So I have no skill, no time, and no interest in reading through my paper and figuring out what a project does. But what I think I'm pretty good at doing is working with the data and then, figuring out trading strategies that I can deploy, run automatically, that produce signals, which I implement in the market, and I make money that way.
How do you see, for the listeners that might be interested in quant trading, what are some things that they should be looking at to see if that's a fit for them?
Yeah, so I guess, look, there's essentially 2 categories of traders, right? At the end of the day, you need to produce a signal to buy an asset, not touch an asset, or sell an asset. Essentially, you have these 3 choices. And you can come up with that as a fundamentally driven discretionary trader, and you produce these signals in your head or during your sleep or by looking at the markets or reading fundamental research, talking to other people. So that's one way of doing it. That is, obviously then very active. It is you as a person, as a brain against the market and your decisions and your choices. And you can't really do this with 200. I've never met a person like a macro trader who will do that with 200 different positions because it's just too much bandwidth, right? Usually those type of traders have 4, 6, 8, maybe 10 big bets on, relatively largely sized because they need to pay off. But those are their big bets for a year, right? So let's say long energies, long crude, long oil, short bonds, whatever the case may be, and they run that, or it's in a single stock. And then there's another category of traders I belong to who produce these signals using essentially code and machine and quantitative techniques. That is a far more scalable approach because I can actually trade 200 markets because the computer has no problem with dissecting and going through 200 markets. I could feed that computer 1,000 markets if they were tradable. And so I can have a very diversified portfolio that way. It also produces signals. Now, where the rubber meets the road is you as a person. What can you handle, and what fits you? If you can't give yourself in to the system and to the fact that the system runs and the system produces a lot of losing trades, and you have to love those losing trades, which sounds so weird, but you have to love them because you love your system, because over the long run, your system works, right? If you follow the rules, you don't change it all the time. You don't overfit it. You don't modify it only because it, has had, say, a negative quarter or even a negative year. You stick to it. It's the stick-to-itiveness, right? You love your system and you love all the losing trades, even if there's like 20 losing trades in a row. You need to love that stuff. You need to give yourself in and just follow that system. That is very difficult to do. And not many can do that. When I was younger, I couldn't do that. Or I could, but I found it so much more difficult than today because I would feel hurt. The position went against me. I would this is a stupid system. How can the system be so stupid? And, buy the S&P up here, look at the chart. It was so clear. That was, a top formation. Nobody buys there. Only my system buys there. Well, then, years and years later, I have no issues with that at all. I just, implement the trades, every single one of them, regardless of what I personally think about the market. I do these trades. And that's been a learning process. But, I've arrived, I think, at that. I still think about the markets. I have a view on the markets, but I'm absolutely capable and able to follow the system. That is a requirement. That is really, if you can't do this, if you don't have the patience to do that, if you want to day trade, if you have an itchy finger and you see something in the market that you want to execute on, short-term trading, here's the head and shoulders for the next 3 days. If this is you, then you're probably not a systematic trader. You need to find something else that works. I mean, there's hybrid forms as well. But the most important thing is, and this is like Market Wizards 101, you need to find something that works for you. If you haven't found it, then it's not going to work. If in the bottom of your heart, you are a discretionary trader and you want to call the shots and, have 4 big positions on and measure yourself against the market with these 4 positions, then you need to work on becoming a discretionary trader and being good at that. There's examples out there. There's great discretionary traders out there who have great track records who can do this and who have shown that it's possible to do. Maybe some of them have been lucky, but certainly not all of them. So it is doable. I'd find that very hard, and I wouldn't have skill for that. But if you are a systems trader, okay, you need some basic quant coding type of understanding. And by the way, everybody talks about Python these days, and yes, I mean, coding definitely helps. But a lot of these things you can run on Excel or with software that's relatively easy to handle. So I don't want to sound. If you're an aspiring quantitative trader, don't let the thought that maybe because you don't know how to program today, that is not a barrier. This should not be an entry barrier. You can overcome that easily, or you can get help. It's just something that you need to figure out for yourself. I mean, can you trust the system? And can you build something that is not over-optimized? At the beginning of your trading career, it's relatively difficult to avoid that because usually you're younger and you're kind of like at the peak of your mental capacity as well. You're fast, you're full of energy, right? You want to build a system. You work 18 hours a day, 16 hours a day. You want to build something that's great. It's very easy to trap into an overfitting process there. And because, it can always, the grass is always greener somewhere else. You can always change your parameter. You can always make the entry a little better. And you can always fine tune the exit. And of course, based on historical data that, you take from your Bloomberg terminal or CSI or wherever you get your data from, you can massage the data so long that essentially you end up with a normal straight line. You will find something that works, right? By adding one overlay, another filter, another parameter, another whatever entry exit signal on top of the one that already exists. You will create a very beautiful past, but a very ugly future, at least with a high probability that future is going to be ugly in terms of your trading performance because the past isn't going to be repeating in the same way as it did going forward. So you need loose hands and few parameters. And a robust system doesn't have many parameters. You would have some basic rules that are rough, and you need to apply them in the same way across everything so that you have enough sample size through which you can detect your edge, and you need to have patience for that edge to come through, and you need to give yourself into the system. The systems that I design and which I trade, they're not by definition designed to carry positively. I have not built a machine that carries positively every day, every week, every month, or every year. It doesn't have that quality. It's very independent, very uncorrelated to the rest of the market. It's very protective because my blowout risk is relatively low, not nil, but very small, because I get out of losing trades quickly and I let the winners run. So I can get a lot of small knife cuts, but it's very difficult to really kill me. But it doesn't carry positively, not every year, not every 2 years in a row even. But when things happen this year, I don't want to name that crisis alpha. I know what that term means, but I don't like it particularly. But usually during periods of market stress, and we have a period of market stress right now because of inflation, yields rising, the war situation in Ukraine, et cetera, text potentially being overvalued, you name it. There's so many fires that you could go on. It's amazing. But in these type of environments, those strategies tend to do relatively well. So they go from an otherwise uncorrelated state that doesn't carry positively all of a sudden to negatively correlated state that has massive skew and carries very positively. So it's like an option for which I don't pay the premium up front. I pay through my trading process. This I love. So The trend following system that I run is up 52% year to date, and we are mid-April.
When it comes to systematic approach, in the crypto space, what are the actual things you take into consideration when building that out?
I trade them like CME, Ether, and Bitcoin contracts. I trade them exactly the same way as I trade all the other ones. So I don't have to do a lot of thinking there, a lot of mental exercise, because they are CME listed contracts, and I can trade them in the same way as I can trade crude oil on the NYMEX. They have a selling price. They have, opening and close. I just treat them in exactly the same way. Same set of rules, all of that. With Exponential Age, the crypto hedge fund business that we have, we allocate money, today at least, we allocate money to other managers out there who have professional crypto trading operations and who not only trade the CME, futures contracts, but on-chain and off-chain in the crypto markets.
Well, that's awesome. And so based on what you're seeing in the market, where do you see the world or the crypto market kind of heading this year? I know.
I honestly don't know. I mean, it's good that you don't ask me for like a price forecast on Ether, but
I don't do any price forecasts, just to generalize how you position your portfolio moving forward for the balance of this year.
I'm hugely positive and bullish on blockchain technologies and the crypto markets. I mean, when you think about it, the adoption that we're seeing in the blockchain space happens at a faster pace today than what used to happen with internet adoption 20, 25 years ago. So this market is growing. And as I've said before, it's very inviting, right? It's very open. Everybody has internet. Almost everybody has internet these days. You don't need to get another cable modem. We all have fiber optic or DSL and these type of things. So it's out there. And then with Bitcoin, in 2009, obviously Satoshi Nakamoto has solved a very complex problem, double spend Byzantine generals problem. And it created digital money, digital gold, a digital monetary medium, Bitcoin. I mean, it has all these narratives. I think all of them are true. But then Ethereum came along 2015, and all of a sudden you have programmability and smart contracts. And that opened the door to DeFi. It opened the door to NFTs. I mean, non-fungible tokens represent digital property rights. You need property rights in every economy. The United States has a strong economy because you have a legal system and strong property rights. And if you own a house, it is your house and it's not somebody else's house, right? So we can now have digital property rights, permissionless, on a blockchain without you, Joe, and I, who've never met in person, but we can meet on the blockchain. And without trusting one another, we can do a transaction there. This opens so many possibilities, Web3, societies, the arts, something amazing will come out of this. So I'm super bullish on this space. I'll definitely, with that hat on, yes, you need to be long. You need to be on the boat. That's how I phrase it. Whether that means Ethereum is going to be at 10K by the end of the year, or Bitcoin will be making a new high this year, I don't know that. But it's likely. The possibility of that happening when the merge happens in ETH and, it moves from proof of work, which it is today, to proof of stake. Well, I don't know. Maybe, it's at 3,100 now as we speak, something like that. Why can it not make 3x before the end of the year? I mean, it has done that many times. And I wouldn't be surprised in the slides to see that. I also wouldn't be surprised to see Bitcoin trading at $100,000 before the end of the year. No guarantees. I mean, let's see what happens, but definitely get on the boat.
And what area is most interesting to you?
On my ledger, I have some Bitcoin and I have some Ethereum. I don't really have the time to figure out whether Solana or Polkadot or Avalanche are going to be better smart contract platforms, layer ones, than Ethereum. I mean, many people say it's faster, higher throughput, highly efficient, lower cost. Yeah. Probably lower security, or yes, lower security. I get all of that, but I can't take the deep dive. So with these type of tokens, with our Twoquants portfolio, we have a total position, but I really kind of like outsource this either to other managers or we look to trade that systematically without really having a view on whether any of these tokens will be rising in price. We'll see. But the Bitcoin and the Ether position that I have, I don't want to say, I mean, look, they sit on the ledger. I haven't touched them really in a long time. I don't think I'll sell them anytime soon. I kind of like the fact that I have an asset of which there's only going to be 21 million. I'm talking Bitcoin here. And this is pristine collateral. It is really a digital monetary medium that is right now still very volatile, but maybe that's going to be far less volatile a couple of years down the road. And we'll be using it as collateral for other type of transactions. Maybe we buy a house, put it down as collateral, stuff like that. And there's only 21 million around, a bunch of which has been lost forever because it sits in wallets which are no longer active. So 21 million is not much, right? I mean, here in Germany, where I'm based, we have 18 million people. So there's 4 times as many people as there's Bitcoin in this country here. So not everybody on this planet can have a Bitcoin. Luckily it's, divisible into many, 100 million Satoshis. But so this kind of feels like a scarce asset, and I definitely want to be long scarce assets. It cannot be quantitatively eased. Doesn't matter what the central banks are doing. So I like that. I think that's defensive. And then Ethereum to me is the purest play, I guess, or a pure play, everything that's programmable. It's still the largest, by any measure, the largest smart contract platform out there. And hopefully when this year ETH2 happens and the merge happens, and let's assume that it happens in a clean fashion because they've tested it and tried it and it's not going to create any problems, then that could really be the engine for so many applications and for so many things that are built in the digital space that, why wouldn't Ethereum go way higher compared to, and it has deflationary processes now built in as well, right? Or disinflationary processes. So that's an asset I'd like to be long as well. All the other ones, I don't know.
That's it. Concentrated. That allows you to stay focused on what you're working on, right?
That's right.
All right. So let's wrap up there for today. For our listeners, what's the best way for them to get a hold of you, learn more about you, or even maybe about Exponential Age?
Oh yeah, you can find us on twoquants.com. So that's TWOquants.com, Twoquants. You can definitely find us there. There's a contact form. Exponential Age is a crypto hedge fund business that I run with 2 friends of mine, John Bridgen and Rahul Pal. Rahul Pal is the CEO and co-founder of Real Vision. I guess some of the people will probably, or some of the listeners will know of Real Vision. It's become the Netflix of finance. Very cool, best in the world video streaming platform for financial markets and macro content, also including crypto, by the way. So yeah, that's what we do. There is a website there, which is expaam.com, expam.com. That's short for Exponential Age Asset Management. There's nothing really on that website because we are a hedge fund. So going forward, there will be some more content, but right now that's a static page, but you can contact us through that website.
Moritz, I appreciate coming on today. Thank you.
Thank you.
Hey, everyone. Thanks for watching my latest interview. If you like what you saw, please click the subscribe button below to become a member of the Joe Robert community. Be sure to hit the bell to turn on all notifications so you always know when I post a new video. Tell me what you thought about the content in the comments below. I always read them and would love to answer any of your questions.